let's bring in Pete McGuire from XM, who's standing by via Skype to go through all the details. It's going to be a macro-laden week and plenty on the currency market front for traders to go and digest. Pete, welcome back to the program. Let's kick off with that inflation print in the EU last night. Another hot one, another above expectations. But of course, no one really knows how the ECB is going to respond. What's your sense as to what's going to take place?
Well, good morning, David. And first of the month, pinch of the punch. I'll tell you what, we're getting punched hard, aren't we? Don't know about the pinch. Pinch at the pocket, 10.7% for Eurozone. And it certainly, beat down expectation at 10.4. So that just proves to you how what a wild beast this inflation story is and how they're going to manage it and what the ECB must do over the next couple of months. So, you would think that they're just pedal to the metal now and each month rolling forward another 75. That's what you would think, David, anyway.
Well, you say that's what you think they should do, but what do you think that they're likely to go and do? Because, of course, they were pretty non-committal, but it's difficult to go and say that we should go and start stepping down. You imagine, given what we're seeing when it comes to this continuous outside beats when it comes to that inflationary pulse.
Well, yes, exactly right. And that's where the storyline is for Europe, because when you're thinking about, as you mentioned, those Baltic states above 20%, that's absolutely hemorrhaging. And you've got a large economy. I think number one by a country mile being Germany at 10.4%. So that gives you I think an indication that the smaller countries are being hurt more than the larger ones. And when you've got a 10.7 read, it's just record territory. And what's happening, David? That's rising at around about 8% per month, growth on growth. So that's the compounding number. So you're at 9.9 or 9.8, now you're at 10.7, and that really is a massive move to the upside, and that's runaway inflation in anyone's terms.
Talking about runaway inflation, it's probably not quite at that point, but certainly looking here domestically, the RBA and a few other people will be quite surprised by what we saw with that inflation print last week. We know the RBA went and stepped down to that 25 basis point increase coming through, surprising the market. Today, in light of that information, and plus we saw that pretty resilient retail sales report, business lending as well, looking pretty strong in the private sector credit, there's talk that we might go and see 50 today. Is it going to be a big, pivotal moment for this market, particularly for the Aussie dollar?
Well, absolutely. The first part is that they'll be looking at those numbers and they were waiting for that to drop as far as Eurozone. So that's a wake-up call with 500 million residents. We've got 7.3% year on year, and we also went up about 8% for the month. So are we sitting in October closer to that 8% handle, 7.3% year on year, 32-year high? I remember 1990 vividly when we had those words coming out that it was the recession we had to have. I think interest rates were 16.5 or 17%, so we're a long way off that. But when you've got a runaway inflation story, I'm sure that the RBA's got to put hand on heart and probably look at 50 and how many more successive rate rises over the next couple of months. Not really the Christmas present we're after, David.
Not at all. And in light of that, the Aussie dollar has been under the pump a little bit. Managed to rally at the latter parts of October, but still down a lot. And of course, you've now got that the interest rate leg is now weakening because the RBA has gone and indicated it wants to go and step things down a little bit. Commodity prices are coming off. China is sputtering as well. From a technical perspective right now, how do you see the Aussie dollar moving forward?
Well, I think what you've got to think about as far as the Aussie dollar is two things. First off, you had China and pretty much a quiet month. So there was the consideration there. Next part, that big sell-off as far as US dollar from 116 back to 110. I think you got a US dollar index sitting at about 111.50 at the moment. So it's on a little bit further move to the upside. So that's where the Aussie played. If the US dollar, and that's what happens as far as Fed Chair Powell, if he hits the go button, then, and that's 75 basis points, then that'll put another rocket under the US dollar, I think. It's pretty well baked in. And where they move over the next couple of months also. So, yeah, I think the Aussie's going to languish at this 64, 63, 62 sort of handle in the short term, David.
Hey, just on that US dollar side of the equation, what are you expecting from the Fed later this week? It's almost a guarantee based off market pricing and what we've heard from some of the Fed whisperers beforehand that we'll get a 75 basis point again. But then what happens down the track? Because we know that risk assets in particular, what's going on in equities, high yield credit as well, they've all been rallying in anticipation we're going to get the pivot. Do you think the Fed's going to go and oblige that sentiment?
Well, David, they'd be looking naturally also very, very focused on Eurozone and that number to drop. And if they got a 10.2 handle, then I think Europe would have been going, yep, we've turned the corner here. And the US probably would have taken the same sort of mindset. Now with a 10.7 read, they're really under the pump. So I'm sure that Chair Powell would be thinking, well, 75's baked in. Do we even go harder to try and contain this? So, yeah, there's a lot of conjecture out there. Everyone has got an opinion. They're like noses. And at the present time, I'd have to say that I think 75's baked in. And how many more do you get by Easter?
When it comes to pure trading at the moment, if you want to be involved with the US dollar, what's the favourite pairs that you have at the moment, Pete?
I'd have to think probably yen versus and pound has been outstanding over the last couple of weeks, David. The appreciation of the pound from the Liz Truss 103 handle, you're now sitting at around about, well, that 114, 115. So they've been dynamic. Aussie's been whipsawing, so, you know, strap yourself in. If you want to ride, that's not a bad market to trade, but it's wild. So Euro's been a little bit, you know, 97 and 99. You're getting a little bit of movement in there. They've been dynamic, and shorting that US dollar over the last matter of weeks has been very, very fruitful for most traders. And maybe we're in now a little bit of a reversal time.
Yeah, because a lot of that move as well coincided. We saw, first of all, the Bank of Japan when it intervened in the market on behalf of the Japanese government. Then the PBOC also intervened as well. So you had two major central banks going and acting to go and weaken the US dollar against their own currency. In light of that, do you think that's a sustainable move, or do you suspect that we're going to go and see a retracement of that US dollar reversal?
Well, David, I mean, front page of the Financial Times on the weekend was, there you go, Japan. I don't know if the readers can see that, 200 billion. 29.1 trillion yen of fresh spending yesterday for the Bank of Japan. That was Friday, of course. So it's an ultra-loose policy, and I think there'll be more intervention as far as the yen's concerned as it edges closer to that 150 handle. So there's the first part there. And secondly, I think a lot of central banks are looking at the currency wars that have transpired, having a look at the yuan, what's happened as far as the Chinese yuan being heavily sold off against the dollar in the last couple of months. So, yeah, there's been plenty of movement, David, and plenty of opportunity.
Mate, just to go finish off, across the commodity complex, very linked to that US dollar story, of course. Anything really caught your eye in that space recently?
Yeah, sure. Base metals down 3 to 4%, leg down last night on London. I think that will probably continue. Very poor numbers coming out for iron ore export, well, iron ore price. And I think we're just in a little bit of a downdraft as far as base metals. Precious is, you know, there's no light there for gold at the present time, or silver. So I think the smart money has been looking at US dollar and what they do as far as equities. That seems to be the flavour at the moment, you know, trading short and long over any given period of time.